Okay, so this is now recorded, and I'll cut it once we stop, and I'll let you know. So, as I said before, you kind of probably know my situation. So, the way things have been going, I'm moving a good chunk of my business on a Substack. Let me just get into the beef of this thing. So basically, I've been doing this for 10 plus years. A lot of my stuff has been built on WordPress. I'm sure you already know about the Google, the Facebook, the YouTube, the algos, the AI, the censorship that's been going on with out there online. It's killing off a lot of small, medium-sized business, even tiny businesses as well that have been dependent on online traffic for um, for like off the internet through YouTube or whatever, or search or whatever. That's all grinding down. It's been like that for the last probably 2, 3 years, but it's really accelerating probably this year and last year pretty badly. So I've heard about Substack. I've suddenly say I've implemented and created an account 2 weeks ago, so I'm kind of moving towards it. Looked pretty good, like to make a so-called uh, new diversified income stream for myself. So this will take you back to the early days of WordPress if you're familiar with it. You get your usual posts, it's like blogging. It's really meant for newsletters. You get video capabilities, podcasting, this thing called Notes, like a Twitter feature, a group chat. I can make it private or public. And the other thing I like about it is I have this thing called a leaderboard. So if you have friends that you want to refer in the account, they subscribe, and it's like a referral system. If you get like 2 or 3 people, you get a free month of what I have that when it goes paid, which it now is paid. So there is that. Um, so I'm just gonna bypass. You already know this stuff. So like I don't know if you guys are interested in this or not, but there's a pricing tier here where it's free. Obviously, you get the occasional public post. I'm not even sure if I'm going to continue doing that because I lose people. And Substack's really built for not free, being a free publication or free newsletter. They want people to subscribe and actually become a paying subscriber to whatever account it is. They don't charge for upfront for the service of using Substack. Where they make their money is they make 10% on each paying subscription. That's where they make their money. So they're going to probably encourage you to become a paying subscriber for whatever you read on or consume on Substack. Um, that, as I said, that's how they make their cash. So that's the free. So I'm not sure how often I'll do a public post. Then there's the monthly tier. Right now it's like 47 bucks US a month. It's really affordable. I don't know if you guys know, but they'll have all the standard Substack features, but where I'm making it more unique is there's two things I've done over the last few months, and it works out really good. Is you have the capabilities of I'm using winning I'm finding winning entries and companies that perform. And I've built it out where you have up to 64 market categories or sectors in the US markets, and it's pretty well global. And then it only focuses on the top performing companies for the month, and then it resets each month. So I post that every day. And also the other thing that I post is something you may not be familiar with is CFDs and forex. So I'm just using this really for data purposes. So if, for instance, you're interested in wondering where the hot capital flow goes, because that's really important, meaning where's the wealth, where's the hot, like the institutional capital going? And you can break it out via a lot of it's going into currencies. Gold's just started to pick up in the last few trading sessions, and gold's picked up about almost 6 or 7% in the last few days, and that's a big move for gold. There's also agriculture, bonds, and all the major stock indices throughout the world. So I'm able to track that, be able to track where that capital is going, and that's where the trends start happening. So I break it out by, yes, this is an actual trend, and maybe it might happen. So I post that every day. So that's in my monthly. So in the annual, what I post, any questions so far at all? Okay, let me continue. So with so it's all like the annual obviously includes the what I just mentioned, the monthly. Plus you get the deep ETF analytics, which is basically what I've done is I'm able to generate ETFs. Maybe I can show you if you want to see some of these samples. But basically, it's an ETF. It analyzes the ETFs over those 64 sectors I talked about, but it goes back to a year, and then it will tell you if how how profitable it is using standard financial metrics, like what you'll see on a professional term sheet. So I break that out by sector, and then I also combine everything that's profitable into one spreadsheet and one set of metrics, so you can get an overall snapshot of what's performing and just have it all consolidated into one snapshot set, I guess. So there's that. The other one that I've been working on, I've got about 4 or 5 trading scripts or Pine scripts. I mean, it's using Pine script, the language, and Trading View. So I can offer you a private invite to all those scripts. And the thing is with those, when you basically know what you want to trade based upon the movements and the momentum of those. Again, it could be stocks, it could be ETF, it could be forex. Any of those scripts that I'm talking about in TradingView, you can apply against any of those assets, and you could just let it run 24/7. This also includes crypto as well, and then you can just apply the strategy or the script using TradingView. And TradingView is so good. You could run it anywhere in the world. It's running on TradingView servers. Their apps are really good. There's Linux, Windows, and Mac desktop support, so it's pretty solid stuff. It's as good as MotoWave. In actual way, it's better, but it's cheaper as well. And that's one of the cool things about it. Any questions on that? And then the last one. Now I'm using the tiers from Substack. So there's the free, monthly, annual, and then there's this thing called Founder. So I've set that up as the same as my Elite, which is basically all my courses plus my 10-year archive on my Quant Labs Academy website. So there's that as well. Any questions on that? Because that's all I got to present, right? So if you want, I can show you some of the sample PDFs if you want to see them or the spreadsheets. Just let me know. Any questions at all? You just type out in the chat if you want. Okay, I'll pull up some samples here for you. So, just as an example, this is from Friday the 25th. So, as an example, let me show you. These are the sectors. Now, remember the markets have been kind of tanking, and they look like they're kind of going to continue to tank. Um, So these are some of the stocks that I have that get picked out, and a lot of these are like with this one. There's probably I don't know a couple thousand stocks, so you have over 2,000 stocks here. The thing is with this, these are highly volatile. So for instance, if you wanted to pick any of these stocks, you can see here the volatility is very high, and I'm using forward guidance and fundamental data. So here, this is the closing price right there. And right here is I'm using a strong buy and a buy, which are from institutions. These are not retail or these are actual institutional players. Bank of America's in there. I don't know if you know Stifel out of St. Louis is in there. A lot of fairly big banks. And then, of course, you get the sell recommendations, strong sell and sell. This is what you don't want to see. You don't want to see anything recommended as a sell, okay? Because it just adds on the probability that you're going to probably lose money because of the volatility. And believe me, when the markets start to decline, the volatility is going to kick in a high gear, which it kind of already is. So I also use two technical indicators. I don't know if you know about this called a rune up, a rune down. So with the rune up, it's a ranking between 0 and 100. When it's 100, that means it's ready to break out or is somewhere in the breakout. And then the rune down is from 0 to 100 again, but the The down is if it's zero, it means there's no sell indicators or it's not bearish at all. So the lower on the Arun down, the better, and the Arun up, the better, between 0 and 100. And of course, in here, I put in the metrics for both the 20-day and 50-day working average as well. So that's all of the stocks that get picked out of the so-called top performing for the month. So in there, there's that. Um, and then there is uh, another set. I got a little chihuahua. He's probably gonna cry. I have a same set that are for low volatility as well. These are winners, okay? If you were to look up any of these stocks here, you can confirm this. Okay, okay. I don't know if you guys heard, but Excel now has native support for Python as well. I just came out last week, and let's see what's going on here. Okay, so it looks like my office is not working for some reason. Okay, let me. Okay, here they are. So these are the low volatility stocks. So if you were to use any of these stocks, you'll see the difference between what I showed you that are relatively volatile or high volatile. So here you can see a lot of these stocks have a very high Arun rate on the upside. So that means they're fairly close to ready to break out. And you actually have certain stocks that have a zero Arun down, meaning there's no sell signal at all. And the better part is that you still have your buys and strong buys here, but you virtually have no sell or strong sells at all. So those are really good stocks to go with. Now, these are just call it picks, but they're not going to be well timed because you just don't know what happens in the market. You look at the last 2 3 weeks. You had more down weeks than positive, so that nobody really has control over that. But the thing is that what I'm finding is if you go with these, you have a higher probability to profit than just some random stock as well. And for me, I like to focus on stocks that are less than $100 to lower your risk if the markets or the positions go against you, because obviously they're more expensive stocks. So that's pretty well the metrics on how that's used. So just to show you how bad the markets are for this is for October August. I'm going to show you is let me just show you the the sectors are this one. So as I said, there's a measurement of about 64 sectors to choose from. So these are the sectors that are profitable for August. There's not very many of them. It's not even 10 sectors. So that just shows you how weak August has been. So you can see here only 13 sectors have been profitable. So commodity metals been doing very well, the 28%. China, uh, which was a rally last week, but apparently it's fizzing out now. So that's coming off. Crypto, I'm surprised it's up there. But yeah, so those are the popular or higher returning sectors. The good ones have been energy, financial, healthcare. There's been a few, real estate, not really, and so on and so forth. Any questions on that? No? Okay. Let me tear that down. And I could show you, um, yeah, it's pretty well it. So as some sample, hang on here, my computer is challenged with all the memory. And let me show you some. So I mentioned the deep analytics. So just as an example, um, we have available here the different profitable ETFs that have been profitable for the last year. So I don't know, something's going on in my office here. I can send out samples if you want to see it. Actually, if you want to, let me go back to the Substack, probably better for you. So in the Substack, which is at quantlabs dot substack.com, if you go in there and go under the market analysis, in here you'll get all my market analysis. So this account's been maybe 3 weeks old, and most of it's going chargeable now, like it's payable. But if you go in there, you'll get these different daily reports, as I mentioned. Um, oh, wrong browser. So let me pull the proper browser up. Okay, quantlabsubstack.com. Boom, go under market analysis. And in here, as I said, just to give you, these are from Friday. So this one I just posted this morning. So this is a typical report that I'll be putting in the Substack. Wow, nothing's cooperating with me today. Um, anyways, but these are the reports I put out. So this would be the CFD and forex. Let me see if I can pull up the Substack here. If you guys got any questions, let me know. If you want to do the audio, that's cool too. I am just pulling up the Substack. Okay, hopefully this will work. Okay, here we go. So essentially, this post here, I just posted this morning. These would be your typical stocks that are or currency pairs or forex pairs that are currently performing. So if you were to take at USD Canada, USD Japan, this right here, USD Japan is probably your number one place to go when things go bad because the Japanese yen's very low volatile and it's just going up. Like I posted on my trading view um this morning. I can't even load up anything. Jeez. Anyways, you guys still out there? Or did I blow up? Can you guys hear me okay? Okay, cool. I'm just gonna have to release some memory here. I don't know what's going on. Um, oh, I know. Forgive me. I got a program here. It's eating up a lot of memory, and hopefully I bought this laptop fully loaded to prevent these good old Windows. All right. So, anyways, sorry about that. So okay. So in here, as I said, these are your usual pairs. Just as a trending, just so you know, yeah, USD Japanese yen's a very good pair to have in your portfolio. This one as well, the European Swedish krone is a good one. As I said, gold is spiking like crazy. Let me pull up my trading view here. Hopefully this will behave. I know trading view is a monster application, but yeah, I want to show you the story. I like what I love about trading view. There's a lot of social to it, like a lot of social response. I'm going to show you one of my stories from Saturday I posted that is my number one story. So, as I said about, let's say, for example, YouTube, Facebook, I don't get this kind of exposure. But let me just show you this. So, this story right here I posted is about the Bank of Japan and the yen. So I have 511 views. In my wildest dreams, I would never get that on YouTube or Facebook because of the suppression that they have now. But here on TradingView, I get exposure like that. I've got now two large trading accounts, publishers that are following me now. But this article I'll just pull up. So this one on the yen. you can see here, this is daily chart, I believe. Yeah, it's a daily. So what you can see here since June, it's been moving up fairly well. If I was to throw this, compare it to another currency, you will not get, you'll see the volatility. And when the whipsaws come in terms of the drawdowns, they're much bigger than what you'll have with the yen. So this is a much better currency to have in your portfolio. Let me show you some examples. Any questions so far? So if I was to show you the yen, okay, create new chart. So what to do this sort of stuff as easily on other platforms, I just haven't seen it. Like TradingView just blows the doors off of a lot of platforms I've seen. So let me just do as comparison. So if I was to show you just standard Euro USD, okay, you can see here it's been fairly range bound, but here you can see that big decline, and here it's been really steady and moving up. And if I was also to show you, because a lot of people will want to know about, let me show you just as another example, gold and USD. Now these are CFDs. You can see how gold has moved up because of the daily chart, and this started on a week ago, and it just suddenly spiked up. All gold and whatever currency has spiked. I don't know what's going on, and all I can tell you is you won't hear about this in the news because um, this is like what I said earlier about watching hot capital flow, and you won't you'll this is an early formation of something. But when I compare it to other currencies like gold and Canadian dollar, okay, you could see that and if I do a probably I don't know well right here you can already see the performance is better, and that's a month chart, right? A month time frame. So holding gold in a certain currency matters. Okay, so you can see holding gold in Canadian dollars up 0.6%. But whereas with the 5 day, um, it's a little better. Okay, but the one just as another tip, I know I'm kind of jumping around here. The best one it was is the Turkish lira. Um, actually, no. Yeah, I could see that big drop. But historically, this would have been a big return you would have had. You can see the big difference there between 28% in the Turkish lira versus the Canadian dollar. But with Turkey, what's happening is they brought a new finance minister, so they're trying to strengthen the Turkish lira. So you can see how it's been flat. So all that since has been declining so much. But with this new finance minister, they're just trying to stabilize the price of the lira. But if you're able to find trends like this, you could do pretty good. Another good trend that you might not know is the USD Canadian dollar, right? So you can see here the Canadian dollar, the USD and Canadian dollar is profitable. So if you're always trying to trade in the SPY, like the markets, um, this is important to know because it shows you that the markets are not really good to be in. So if I did a 5 day, you can see the SPY there's not so much, whereas the Canadian US dollar, gold and Canadian dollar is performing a little better. But if you're able to find these kind of trends, that's what matters. Um, and if you look at Bitcoin, this is the shock here, is Bitcoin performance has been not that good. But when you look at the 3 month between all of these, you can see how bad Bitcoin's been performing. And even gold is not so bad. You know what I mean? So this is why it's important to watch the hot capital flow to know what to trade instead of the buy and hold, because the buy and hold, I think you're gonna lose money, especially if you're in the markets, like in the stock market, and nothing's really stable in terms of trending. Like it used to be for years, the euro Turkish lira was a great investment. Um, and that's gone now over the last month. Whereas, as I showed you, the USD Japanese yen has done okay right here. And if you knew about it, right, that's what you trade in. But it's finding these, right? And that's for that's let me see the monthly chart. So yeah, so your best one would be the USD Japanese yen. I mean, it's not a lot, 4%, but when you compare to the SPY, like you would be negative over the last 3 months. But if you held on to the USD Japanese yen, you'd be doing pretty good. So let me get rid of these. So crypto, I think I hate saying it, is not the place to be anymore. It may come around, and that's because of the Bitcoin ETF thing, because that's kind of killing off crypto overall. Um, but what was I going to show you? Oh yeah, the DXY. So I think the last half of the year is going to be not too pretty. I think so. The two to be in is DXY, the U.S. Dollar index, and the USD Japanese yen. Those are your two best for stable return, but it will continue to move up. And there's a couple other ones, as I said, is like the Euro, Swedish as well, Swedish krone. So those are probably your top ones over the next few months, right? So knowing this stuff, you'll be able to eke out a return, whereas most people will be here or be stuck in Bitcoin and they're just not performing. Gold right now is performing. It might be in early stages of moving up. I don't, nothing's guaranteed. But I'm pretty confident this will be doing well. The DXY might start doing well. Anything else, I don't know. I mean, I'd love to see crypto come back, but as I said, with the suppression of BlackRock and the ETFs that they're bringing out, that's kind of killed off the performance of Bitcoin. So, any questions so far? So, my overall um, thing here is that if you get that, even the basic monthly, and you know this stuff and what stocks to go into, and namely in the ETFs as well, as another example, because the ETFs, I think stocks have performed and will outperform um, stocks like between with Nvidia taking off like it did, the Magnificent Seven, those stocks and overall the stock market will eat the ETFs. But now that the stock market's kind of come down or going into range bound mode, you definitely want to either use what I've already shown you, the the USD Japanese yen, the DXY, as your big investments for safe return. And also, if you look at this right here, actually, well, my computer has a conniption. Okay. So if I go up here into this folder here and showed you this one, actually, I could show you today's returns. So let me pull it up. I'm gonna have to go onto my Linux console here. Or actually, no. So if I, yeah, okay. So I'm gonna show you Friday's reports. So here, these are the ETFs, okay? So as it comes up, so there's two purposes what you can learn from the ETF. So these are the only ETFs right now that are performing. Okay, soybean mint, which is a PIMCO. Actually, I can show you on the trading view. So we have here soybean. So now we're getting into ETFs. So that's Tecrium soybean. So let me clear out all these other ones. And you can see here that soybean's starting to perform, right? Now, again, here's the problem is let me show you one day. You can see how really spotty it is in the ETF. You can barely see any bars. So that you really can't actively trade day by day. But it's a definitely buy and hold, right? So if I showed you, I don't know, 3 month might look this chart might so it looks a little better. But you can see it's starting to take off here on soybean. And that's one of the reasons why the Fed is saying what the Fed's saying, because with Powell on Friday, he said, well, we're not sure about inflation. Well, when I look at the hot capital stuff, food is still up, energy's still there. Them raising interest rates is not killing off inflation. What they're not telling you is it's the it's the uh, it's the national debt that's is causing all these problems. So no one's talking about it, but that's the problem. Any questions so far? No? Okay. So there, that's soybean. Let me pull up another one. So we have here mints. As I said, that's a PIMCO enhanced short maturity active exchange ETF. So there you go. So those are the trends right there. These are like T-bills. Yeah, they pay out every week or every month. So that's where most money's going into, or into instruments like this, right? And again, that's PIMCO. And the closing price per unit is $99 for that one. The other one is right now T-Flow, which is iShare Treasury floating rate bond as well. And you can see it's a similar pattern. So this is where money is going into. These are your top performing ETFs. So knowing that, that's where you put your money instead of guessing and trying to figure out where to put your money. It's not in the stock market. Um, so I don't know if you heard about in the banking system where they said that Charles Schwab's in trouble. It's a 7 trillion market cap, and that may blow up. That will be the largest ever. And they've done some things that they couldn't control, but their depositors, they're in trouble. Actually, I put up an article on this. I can show you. So this one I put up on my Substack actually. So I can walk you through that. So again, this is the sort of stuff I put in the stuff in the Substack. So is a severe banking collapse coming? So again, I don't publish this. I don't make this public. Um, so yeah, so there is Charles Schwab is going to blow up. There's a couple of videos in this as well. Oh, here we go. So just so you know, at a high level, this video here from this guy Hugh Henry, Scottish, he actually in his part two video tells you where you should put your money. This guy's worth $50 billion. Sorry, $50 million. And what he's doing is smart. Like you think, oh, I'll trade crypto retail wise. He doesn't say that. He trades futures crypto, and he explains why in the second part of this video. It's things like that that I'm posting behind my paywall. Um, and he talks about what's happening in the banking industry right now, and things will. Well, actually, there's two things. First, there is uh, Charles Schwab may blow up. That will be the next 2008 all over again times 10, let's say. The other big thing is you'll see here banks locking in your money. Okay, so that means another way of saying bail in. Okay, so he talks about that and explains why. Here's the part two. So in here, actually, there's a story. So are bail-ins real? Yeah, they are. Why? Because there's a bank here that posted this story on. People are complaining through this bank. It's an online bank for Walmart customers and TurboTax customers. They're having problems logging into their accounts. Okay, and then they say, "Oh, it's a technical problem," and the Better Business Bureau is going to look into it. This is the early stages of banks in trouble. They have 32 million customers. This bank. It's not a small bank. It's like dot green or something like that. I could pull it up. This article, but this was reported on the 27th. Okay, so because I what I do, like I read daily stuff that not well, Bloomberg's part of it, but it's these stories that you want to know about. So the company's called Green Dot, and what's happened is that bank is in trouble for sure, and they're probably kind of going to do a bail-in, and the BBB, the Better Business Bureau, is supposed to investigate that. But that's your first bail-in example happening, and it's not a small bank, 32 million customers. Um, Also, this one is another example. People see this, like the smart people, the smart money see this. So in this story, you've got $48 billion exiting out of banks, all deposits exiting out of banks, 48 billion, okay, exiting banks. So that's why now PIMCO's in trouble, okay, because they don't have the cash. The only thing they're either making money on are loans, or if they start trading uh, T bills and treasuries, and those have gone up. So that's why a lot of these banks are in trouble, and that's why people are moving their money out of bank accounts because they don't feel safe. And as I said, where that money's going is into T Flow and the other one I showed you from Pimco, the Mint. That's where money's going are into these things by the bucket loads, and there's tons of them, like BIL from Bloomberg. There's one from G-Bill from Goldman, and their volumes are going up. So all that money in banks are moving. Here's my dog. He's whining all the time. Anyways, that's what's happening right now in the markets. So, and then there's China, and everyone thought China will save the day. They're in trouble. I think they're kind of going into a depression. Um, Probably like their economy is in trouble. And what got us out of 2008, '09 was China, right? And this time, who knows what's going to be? Personally, I think it's going to be, I hate to say it, a war to bring down debt and the whole 9 yards, the whole bad stuff I don't want to get into. But that's the sort of stuff I'm posting now behind the paywall. Another thing I posted this morning was uh, I guess it's not been posted yet. Is all my when I go through all my tech stuff and all my crypto stuff, I post that behind the paywall as well. And those are interesting projects going on, like how to create cryptocurrency, how to create your own search engines. That's what I just posted from Saturday. There's always interesting stuff I post behind that paywall. So that's why I'm on Substack, just to make that clear. And that's one of the reasons why I'm on it. I like the platform, and it's pretty cheap. And uh, yeah, it's a good business model compared to anything else I've seen, like to replace WordPress to circumvent all the censorship and all the AI. And I'm already getting like daily maybe like 2 to 3 new email opt-ins through Substack itself. So I get that as well, which I have to go struggle through to get traffic via Google. I mean, it's that bad on Google and all the search engines and social media, and including YouTube as well. So that's why I'm happy to be on Substack. So that's the value. You guys got questions at all? Yeah. So if you want, just type in yes, you've had enough. I'll turn off the recording, and then we can talk private stuff. Do you want to turn off the recording? You can see here it's recording, so I can turn that off. So what I'll do is if there's no questions, I'll do a going once, twice, 3 times, and then we can carry on with the conversation. Going once, going twice, going 3 times, no.